Wednesday, October 19th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the Taiwan question, how I think the move away from the dollar will accelerate because of the Taiwan question. Before I do that, we're going to look at some UK news and also at the gold market in the UK. I've seen something that I've never seen before in the UK retail sector. So today we had the what's called the inflation data. I call them the price data. So we had the consumer price index, which is a measure of prices that has been tinkered with many times by the government, and it's actually underestimates the rising cost of living. And we've had the retail price index, which probably has been tinkered with, but measures a much broader basket that reflects better the rising cost of living. And we also had the producer price index, which is the rising prices at the production sector, the wholesale sector, prior to when products come into the consumer sector, of course. And you're going to hear from the mainstream media, if you watch the mainstream media, unfortunately. I try not to, but a lot of times you get a glimpse of it. I don't watch television, as I said, but you're going to be told that inflation has hit a 40-year high. And most of you know that that's not true. Most of you know that inflation has been baked in the cake through the creation of currency and credit, through the manipulation of the bond market, the gilt market, to keep interest rates low. That's driven this credit boom, and it's debased our currency. And what we're getting now is the consequence. Our currency is dying. We get a lot less for the pound, of course. So be as it may, CPI was expected to rise from 9.9 in August to 10% year on year in September. It rose to 10.1. Doesn't make too much difference, 1/10 more. What does this show us about the Bank of England? Well, it shows us that aside from building this inflation tsunami through keeping interest rates manipulated for, well, since 2009, really, aside from that, they have dragged their feet. The last straw that broke the camel's back, I would say, was the 500 billion or so in QE they did in 2020, 2021, and the fact that they cut rates again to zero. They only started raising rates and begrudgingly at the end of last year. So this is not going to end well. They've lost control of prices. Yeah, control of inflation, they lost a long time. But if you look at the RPI, that came out at 12.6. So that was expected 12.3. And more interestingly, the input PPI, that was expected to drop from 20.9 to 18.8, but it still came out at 20%. So the Bank of England is losing control. There's nothing they can do, really, by the time they get to double-digit rates. Everything will be destroyed. The economy will be destroyed. The government will be bankrupt. Corporations, households, they will have lost everything. So they can't get the base rate above the rate of price growth. It's impossible. So things are not great, really. And they're going to try to embellish everything, of course. Oh, we're working on this. The government has U-turned. They're going to do this and this. But I'm afraid it's too late. And with that, I want to move to gold, because gold has been frustrating, especially for U.S. Residents, because the dollar has been relatively strong against our trashy European currencies and Japanese currency, for that matter. But in Europe, gold has done a pretty good job, and despite that, they're still trying to keep it down through the spot or paper price. They've got an infinite amount of paper, of course, to throw at it. But I saw something last night that I'd never seen before, and it's from one of the biggest bullion dealers in the UK, which I've used in the past. I've asked Paul Atkinson if he wanted to have a promo code with our channel. I know him fairly well. He said they don't, but that's fine. But I got an email from Atkinson and said, we want your gold coins. So they're now paying 2% over spot for you to sell to them. And to be honest, I've never seen that before here in the UK. Yes, prior to this, he was paying 1%. And this is one of the biggest bullion dealers in the UK. So, yes, gold is a rare element, of course. It's hard to find it underground. It's not easy. But it's quite abundant as a commodity because it's not consumed, or at least not 99.9% of it is not consumed. So it's always going to be in vaults. It's always going to be in people's fingers and in people's jewelry and everything. But what we have right now is that I think people are starting to realize that our monetary financial system is very fragile. A few weeks ago, the whole defined benefit pension system almost evaporated out of thin air. People are realizing this system is rotten to the core. It can't survive. So people like Atkinson's, they're not getting people selling gold, but they're getting a lot of people buying gold. So they've had to raise the premium to buy gold, which is, in my opinion, I haven't seen that much of it here. And it corresponds to what we've heard about the Royal Mint. I think this story was October 13th. UK's Royal Mint lifted by market turmoil as demand for gold surges. So record profits at the 1,100-year-old company, driven entirely by its consumer business, offsetting the decline in the use of coins. Of course, these are gold and silver coins. And yes, they've had a very good last 12 months, a record. And despite that, we keep seeing the wholesale market, the bullion banks, the central banks, assisting these people, throwing paper at it. And why do they do that? Well, because the higher the gold price goes, the more of a signal that not everything is fine with the system is out there. But I'm afraid they're losing the battle. I think these premiums are going to go even higher, premiums to buy coins. And of course, unless you're really desperate and you really need the currency for an emergency, I'm sure people who know what's going on, they're going to hold on to their gold, and they're going to try to get even more. And eventually, and I know I've spoken about this, but I've also said to people, even before the silver stacking move, the silver squeeze movement started in February last year, I was telling people all these years that the way to beat the bankers is to extract your currency from the system and hold on to real money, gold and silver. And I think that's just beginning. So with that, let's go to China and Taiwan. Well, I read this article a few days ago. It came out on October 16th, and it's about Xi Jinping's speech at the Communist Party Congress that started this past week. I think it goes on for about a week, maybe 10 days, and it was a 2-hour speech. And I thought that was very significant, especially with what's happened with Russia and Ukraine in the last months or so, since February. All the sanctions, all the withdrawal or freezing of Russia's reserves, the fact that Russia's been removed from the SWIFT system, their banks, most of their banks, of course, and I think this could accelerate the move for China away from the dollar, because they know that this is going to be a big problem for the West. The fact that they see Taiwan as a domestic problem and something that they have to solve. So let's quickly go through this. It says Chinese leader vows to use all not necessary measures to secure Taiwan at opening of Communist Party Congress. So let's just go through it a little bit here. It says President Xi Jinping has called on Chinese Communist Party's 97 million members to steel themselves for a critical time in the country's history as he opened a Congress that will solidify his status as its most powerful ruler since revolutionary hero Mao Zedong. In an almost 2-hour speech in the Great Hall of the People in Beijing on this Sunday, Xi said the party's mission is glorious beyond compare, as he outlined goals ranging from an all-out people's war against the COVID-19 pandemic to realizing the unification of China and Taiwan. So this is even more important than Ukraine, I think, is to Russia. Russia didn't care if the Ukraine didn't become part of Russia, to be honest. I think they wanted Ukraine really as a neutral country, respecting the Russian minorities, so to speak, because they worried about NATO being there. But China is different. China and Taiwan is like a little bit like West Germany and East Germany, I would say. A little bit like the North and South in the United States during the Civil War. It's almost like Lincoln saying we need to reunify the nation. So I think it's the same for China and Taiwan. So it says here in one of the speech's biggest applause lines, Xi pledged that the party, which celebrated its centennial last year and has been in power since 1949, would never renounce the use of force to achieve unification, and will take all necessary measures to stop all separatist movements. So I thought that was very significant. The resolution, he goes on to say, this is Xi, the resolution of the Taiwan issue is a matter for the Chinese people themselves to be decided by the Chinese people. That's what he said, and he didn't mention the U.S., but that's as good as mentioning the U.S., I would say. And this is what I thought was interesting. This is from a guy called Sonny Lo, a Hong Kong-based political analyst. He said, this is a clear message to Taiwan and to the U.S. China has the determination to resolve the Taiwan issue within the next decade. So I think they've shown their cards, the Chinese, and they're gonna have to start moving in terms of moving away from the dollar. And I think it fits well with the move by the BRICS countries away from the dollar. And I think we could see this process accelerate very soon, because a decade is not a very long time. And now that they've shown their hands, the Chinese, I think they're going to have to start moving, the Chinese. So that's why I think that's important. As I've said many times, doesn't mean the dollar is going to disappear. It's just that the demand for dollars out there is going to decrease, because more and more countries are going to be using other currencies, be it the ruble, the yuan, the Saudi rial, or the Brazilian real, and even Saudi Arabia, of course. We were told by the South African president wants to join the BRICS. So this is accelerating, guys. Yes, I've been talking about the demise of the petrodollar for a few years, but it's accelerating, as I said. So with that, let's quickly look at the markets this morning. It's 8:24 a.m. London time. We've got spot gold, the paper price of gold, of course, where there's no demand because you don't really have to get any gold to sell. That's at 1639, down 12. The high's been 55 and the low has been 1637.50. Silver is the same story as gold, and silver will do even better than gold once the paper game has to really, the paper game can't last forever. It's not real. It's not real gold and silver. But anyway, silver is at 1860, down about 12 cents. High's been 1882, the low has been 1853. The Dow future is pretty much unchanged. NASDAQ is up about 50 points. S&P is up about 6. So not much going on there. To the currencies, we're seeing sterling come off a little bit. It's down 1/3%, 112.88. The euro is down 1/4, 98.28. The yen continues to melt down. It's approaching 150. Started the year, I think, at 114, the dollar. So right now, it's the dollar is up a bit here at 149.50. Dollar is up 0.5% versus the Swiss franc, 99.87. I guess in Switzerland, the problem is Credit Suisse, right? The Fed is having to help out Credit Suisse indirectly through the Swiss National Bank, which I think is scandalous, really. U.S. taxpayer bailing out a major Swiss investment bank. The dollar is up 0.25% versus the yuan at 723.80. And the dollar is drifting back down here versus the ruble is at 61.60. Recently we got up to 65, so dollar's coming back down. Aussie dollar down 0.25%, 62.95. Dollar's up 1/8% versus the Canadian dollar, 137.50. And the Kiwi dollar is down 0.2 at 56.73. So to the general commodities, WTI crude is up 1% at 82.86. Brent is up 0.5%, 89.50. High-grade copper is down 0.5% at 3.33. And U.S. nat gas is up 0.25% at 6.10. I saw a headline about President Biden releasing more petroleum from the Strategic Petroleum Reserves, or as someone called it, I think on Bloomberg actually, the Strategic Midterm Reserves. All that's going to do is make it worse in terms of higher prices when the United States has to replenish those reserves. And that's going to happen very soon. I would say probably after November 8th. So to the bond market here, we've got the UK gilt market. Let's look at that. The 30-year gilt yield is unchanged at 4.30. Still relatively elevated. It has come off, of course, from above 5, but not out of the woods, as I said. The 10-year yield actually is up 11 basis points at 4.06. The 2-year yield is up 9 basis points at 3.64. And I think the U.S. Treasury market is under pressure this morning, i.e. yields are rising. The 10-year yield is up almost 7 basis points, around 4.07. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I will wish you all a great rest of the day. Take care. Bye.